also called 600 seconds of trading. In the next 10 minutes, I'm going to provide you guys with a quick update on the financial markets. And before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk and you can lose your invested money. There's a little button here called risk disclosure statement on the page, which will highlight the risks involved of trading. Hopefully, of course, with the help of my insights in the market, hopefully we can help you guys to support you guys in your trading. Because what we're going to do now is we're going to take a look, as we usually do, at the euro, Bitcoin, gold, crude oil, and the DAX 30. And why should you pay attention to me? Well, I've been trading since 2006, so that's many, many years. And it took me a lot of years to become sustainably good trader. When I started trading in 2006, I had an initial success. My account was up with about 40% or so. I knew a bit about macroeconomics because I used to work for a small Swedish broker in 2005. So I had some experience. Managed to return some good returns initially, which was good because I was a student back then as well. 2006 I went back to university to complete my degree in economics, and I didn't know too much about technical analysis, which I learned about the hard way, and I quickly gave back those returns and spent the next few years reading up about technical analysis. And for a long time I was heading down the wrong path, which is scalping, short-term trading, which is what 90% of people do. Now I have a mix, but primarily longer-term trading to reach a state where I'm consistently profitable, or not consistently profitable, but profitable at least since 2014. So hopefully I can guide you in the right direction. Now, my preferences are to trade breakouts. And in the euro, you had a breakdown just recently. Here on August 10, the market plummeted, and as you know, we were talking about this. So the market declined with about 200 pip. I sold on the back of this breakout in my account for the year because I shorted euro dollar, I shorted silver, I went long the dollar index, and I was also long dollar, Singapore dollar. And my account actually increased to about 50% for the year at that time. This is really my preference. Markets just trading sideways like this for a month or two, and then you have a nice clear break like this one. Now, on the back of that break, the market should have declined more than what it actually did. There's different ways of interpreting this, but if we treat it as an ascending triangle, which you can create if you link that high like this, and then this is the horizontal support level. So the break here should have triggered a decline down to 12.33. Now, it's okay to have a test of the breakout like this one, but it's not okay for the market to go excessively above the breakout candle, and it's not okay for the market to spend time here as it's doing right now. It should just be up and then quickly down. Take a look at the Aussie dollar CAD for insights to that. And with this movement, I got out pretty much here somewhere at I think it was 14.15 or something like that. The market now pushed quite substantially higher, and I'm more neutral on this market. Now, if we look at this today, you have highs up here, you have lows down here, and if you look at it from a bigger picture perspective, we're still dealing with a downtrend. You're still dealing with a central bank in the US that wants to raise interest rates, and you're still dealing with the European Central Bank, which is not ready to increase interest rates anytime soon. So from that macro fundamental point of view, and just from a trend perspective, if we're trading at 1303 or 111.18, or the target around 112 of that ascending triangle, and 4 weeks from now, that would not surprise me at all. A good indication of sort of the longer term resuming in the dollar is here. It's the Aussie dollar, right? Aussie dollar looks very, very similar. A few days ago, it was just trading out here. Then, of course, you had some political pressure that pushed it to the downside. But you've seen similar developments here in the New Zealand dollar versus the USD. And you even seen some similar developments here in the pound dollar. So if you were to ask me, or put a gun to my head, where's the euro going to be trading in 4 weeks? Well, I'm going to say 113 over 118. Now, in the short term, which is what I try to avoid nowadays, I don't actually actively trade very, very in the short term. But in the short term, you have a short-term bullish trend, all right? And the market, as long as you trade above this level, could potentially push a little bit higher. So when we have that, if we want to trade with that short-term view, then it's fine to do so as long as you trade above 1487. Trade above here, and the market could potentially go to the upside. Trade below it though, then we're probably going to go down, and then we're going to probably be in a very similar situation to the Australian dollar, where the currency plummeted, and any sort of corrections should be most likely sold. So that is what I'm waiting for. So I'm not super enthusiastic about the euro right now. Rather, when it takes out this level, I think potentially could start to rebuild a short position in this market. Until that happens, you still have that short-term bullish drift. Might go up to 1631, maybe 117, but you have so much overhead resistance here that it doesn't make too much sense to actively sell here, or to actively buy here. What we added, let's talk about the Aussie dollar. It's one of the most talked about currencies. So as I understand it, Australia has a new prime minister, so maybe this is over now. But what's interesting here is that the overall trend remains bearish nonetheless. If you look at it from a daily time frame, you clearly see a downtrend. The market peaked at 81 cents per dollar, 81 dollar cents, and now it's at 72 dollar cents. And the next major low is at 71.48, which is unfortunately quite close by. Break to this level though should most likely just open things up for a decline down to 68 cents per Aussie dollar. Now in the short term, you know, there's different ways to get involved here, but if one is not involved in the market, you are just seeing a bit of a pullback. I think we can go maybe a little bit higher to 72.97, but from these levels, I suspect that this market could trade to 72, maybe similar to 150, and as long as it's below 73.86, I see no reason to change my bias. Next market is gold. Now gold here is definitely been tricky, and yesterday was like sort of a perfect example of sometimes where short-term trading could be a bit problematic. Problematic because the market swung to the upside, got stopped out, and then went to the downside overnight and tried to break lower. There's not too much to do about that. Going forward, I mean, if you can't see that this is a downtrend, then you probably should not be trading. However, though, I don't know why, but people that are on Twitter, not everybody of course, but most people on Twitter, they love to trade against the trend. Not sure why, but that's just what they do. They will draw some trend lines and say, because not so long time ago we're trading here, and they say, wow, look at that trend line, look to buy here. And of course you could have drawn a lot of these different trend lines. You could have done this and you say, well, look to buy here. I think they did the same. There's so many trend lines you can draw. Instead of just going with the flow, people love to fight the flow. Now, when something goes down in financial markets, it will continue to go down. We have what we call fat tails. If you look at the distribution of financial market prices, they don't line up nicely in the middle as you know, other things do in the natural world. Financial markets, either prices are going aggressively higher or they're going aggressively lower, or they're stuck in the middle, and then when they break out from the middle, they again turn very bullish or very bearish. And the market is a bit bipolar, is the right word, I guess. And that's why people talk about fear and greed. And here it's more about fear. And on a break to 1182, I think it's fair to assume that the market has once again turned bearish. So if it breaks to the downside here, I think it's time to target this low at 1160 and maybe down to 1124. On the other hand, if it goes up a bit, maybe it goes up a bit, just a little bit sideways, and then we'll see what happens in the next few days. For me, this is still too bearish, too aggressively bearish to do anything about. I want to see more sort of sideways price action before looking to turn bullish. Here is crude oil, and crude oil was in a weak downtrend. The market was creating lower and lower and lower and lower highs on this 4-hour chart. The market is now pushed above this level, and I suspect it can go a little bit higher, maybe to 69.81 as discussed. And I think it's not necessarily people buying here because they think it's gonna moon. Rather, I think it's gonna maybe people being short that are being pushed out. And there are short-term setups. I think maybe some people will be buying here, put a stop loss down here. But my preference is to wait for a steeper pullback, which is very, very typical for this market. Might not happen today, might not happen on Monday or Tuesday, especially because the futures markets are probably going to be closed on Monday. But maybe Tuesday, Wednesday, you have that corrective move. And maybe down here, it makes more sense to look to get involved. Because when we buy and sell, the risk-reward ratio is critical. So if we buy down here, we risk 3.4%. If it goes to the upside, we make 4.8. And obviously, if it bottoms out, you're looking at 11.66% return, which I don't think is going to happen within the next month or two, but you never know. DAX 30, not much is happening here. Sorry, that's the Dow Jones. This is the DAX 30. Not much is happening here, and this market has been trading sideways on the daily chart for quite some time. And in the short term, we're dealing with also a bit of a looks like an ascending triangle to some extent in the 4-hour with two lows. And my preference is really, if we trade below the June low, then this market could continue to trade to the downside. Technically, if we were to trust this pattern, then a break to the low could take you down to 11,315. So that is something, but I wouldn't get that excited. We're not talking about Bitcoin here. We're talking about the DAX 30, which are good companies producing good goods that people actually need. So a break to the low could potentially take you down to 1180. That's it, and then we'll see if it wants to continue to decline. If you are very bearish, and I'm sure some of you guys are, look at this. Now this is something interesting that I didn't trade myself. I was on holidays. I wasn't really able to capitalize on it. But this is the Italian stock market. Remember the Italian stock market? Everybody was talking about it when we're down here. Not much happened. Now some people still pay attention to it, but most people are not. And quietly, the FTSE Italian stock market declined below its 2018 low. This by itself is some sort of a descending rectangle or some sort of a triangle. Many times it doesn't matter too much because the target is going to be the same. Key point here though is that if we take the less aggressive measure, which is from support up here, then we could still trade a little bit lower. And I think this for now looks like it wants to head to the upside. I'm not going to be selling this directly because of the liquidity issues with this market, but I think if it goes up a bit, I think traders are going to look to sell again. And as long as trade below this level here, which is the August 10 high, I suspect that this market can continue to trade to the downside. Now, we did not cover the S&P, so let's do that. Here's the S&P. S&P is bullish. We talked about buying here, moved up, moved down. Fortunately got me shaking out because I always try to reduce my stop loss to break even as soon as possible. But the market remains bullish. We are now at that target discussed when we're trading down here in July, which is the 2018 high. And I believe we're going to continue to trade to the upside. It's not lots talk about it, but look at this. This is the Russell 2000, new all-time high. People are not focusing on this. We just had a breakout a few days ago here, and the market could potentially gain with another 4.65%. You have the Nasdaq 100, which is very close to its all-time high, and I did an update on this, an article in the technical analysis section here as well. Take out 7,506, or this high more or less. You could potentially see yourself a new all-time high in this index as well. So wouldn't be that unsurprising if the S&P 500 as well hits a new high, moves to the upside. I'm astonished that so few people have covered the Russell 2000. It is here. Just a breakout 2 days ago. It hasn't really left the area. As long as trade above 1694, we should be able to propel higher. Now, what are we going to cover next? We're going to cover Bitcoin. So this is Bitcoin. Now, Bitcoin, fortunately, there's not much happening here. The market, the way this looks to me that, if we can establish ourselves above 66.39, I think this market could go up to 74.18, maybe 8,000. And then it's going to be capped by this. Why? Because you have Ethereum being in a downtrend. You have Ripple as well, lingering around the marks down here. And, this market is going to go up. It'll go up, maybe up to 42 cents per dollar. I'm talking about Ripple. But then there's going to be so much overhead resistance here. So unless something happens and people suddenly start to get very excited about this, I don't really see Bitcoin trading much higher, because it's going to be weighted down by Bitcoin Cash, Ripple, Ethereum, EOS, like all of this, Litecoin, all these markets are bearish. Doesn't mean, of course, that you can't potentially get away with a nice little pullback trade. Look at this. This is Litecoin. Take out $62. You could potentially see a bit of a correction, maybe 20% up by risking 10% or something like that. In Bitcoin Cash, if we trade above this high up here at 615, it could potentially head to the upside. And yeah, you might be lucky, you can buy here, stop low, but I'm telling you, a lot of people bought doing with the same strategy, just buying at lows, hoping for that push, which eventually happened, but it's easy just to lose your head and not make any money on these sort of trends. So back to Bitcoin. All the other coins look depressive. If they manage to stabilize, I guess Bitcoin can establish this above 66.39, go a little bit higher. But then because of the overall downtrend in all the other markets, most likely Bitcoin will be capped by this level. If people don't get very excited about Bitcoin and Bitcoin trades below 5,771, will move substantially lower, potentially down to 315, which is the target of this ascending triangle. Also, let's just take a look at this. In past aggressive downtrends, Bitcoin has declined by 90% or so, which means that we could potentially be trading at 1,827. I think at this level, I would potentially be like everybody else and say, all right, let's just put some money on it and then just forget about it. Maybe I'll do that. probably, well, we need to see when that happens really. Ideally, we have some nice bottoming out pattern here. That would be the ideal situation. Okay, let's see if you have any questions. Antonio says, good morning, Alex. Welcome back. Thanks so much, Antonio. I hope you are well. Nice. So Antonio is long the Russell 2000. He went long yesterday's low and has another trade set on a breakout. Yeah, why not? There's different ways of doing it. You know, you can do as you said. You know, potentially buy as you did, and it's possible to buy more on the breakout. I'm already long here, and I will probably add Nasdaq 100 long on a break. And the idea would be this: if this market goes up, it needs to go up with 1% or so, and that would lift my position here into profit. So if it goes also up at 1%, then we're trading here at 1,740, and that's good. So the way I look at it is that if I get triggered on the Nasdaq 100 long, I will already have a bit of profit, and that profit I'm going to use that to open this other position in the Nasdaq. If the Nasdaq then turns around and just does not break out higher, I'm gonna look at the Nasdaq 100 position and the Russell 2000 as just one big position, and then I can decide to close both at their stop loss levels. But many times what I do is that I try to close things at some sort of break even or for a small loss. And I did something similar with the euro. So with the dollar index, I bought here on the breakout on August 9, went long. The day afterwards, when the euro was trading down here, I got an average entry at 14.70, so I added more. I had already a bit of profit in the dollar index, sold some more here, and I also shorted silver. So I shorted silver. I think it was somewhere around here. When we took out the lows, sold here as well. Then this market collapsed. I also bought the Singapore dollars. I also shorted the dollar. I shorted the Singapore dollar. That's what I did. And here, I bought at 55, 45. I think it was, or 55. I think it was 55. So I bought up here. Stop loss was somewhere down here initially. Actually here I think it was. But what happened here is that all positions went into profit, and then this one went down, and I reduced my stop loss to 37.15, which was here. And then I got stopped out here, and then I realized, the euro is not behaving the way I wanted to. Dollar index is not behaving the way I wanted to, and I already had a loss here. So I closed everything out. I think total profit after financing fees and everything was about 5.5%, and that propelled my personal account to about a 50% return for this year. On Bitcoin, a bearish head and shoulders on the daily. Let me see. So this is Bitcoin. I would, on the daily, is that I wouldn't, it's a big head, potentially left, right shoulder, but I wouldn't really treat this as a head and shoulder that way. I think, I wouldn't do that. Usually we want to see the left shoulder a little bit higher. than the right shoulder. Sorry, a little bit higher than what it is. It's a very, very weak left shoulder, if this is what you mean. It's a little bit like the euro. Some people said that this is a head and shoulders, head, left, right, but again, this shoulder is a little bit weak, I think, to be interpreted as a head and shoulders pattern. But in Bitcoin, it's totally fine to treat this big picture as some sort of a ascending rectangle, which will still give you a very aggressive target. Difference, if you take it in the middle, it's going to be about 42%. If you would take this section here, which would, I guess, be the same profit target of your head and shoulders, this would be a decline of 30%. So a good example of the same pattern is, or similar pattern, is this. This is actually not the best. I think Litecoin had it. Yeah, this is Litecoin. Litecoin had a similar pattern to where Bitcoin is right now. You have 1, 2, 3 touches here. This is descending triangle as well. And you could have measured here, which was a 40% decline. And a 40% decline would take you down here, which we reached at $63 per coin, $64 per coin. Some people would take this as well. This is a 54% decline. And this would, this is 54, which we actually touched more or less. Did you notice something different? Here I'm talking about percent, and it's just because the way this market trades, it makes more sense to talk about percent, because here's a $127 decline, but 108 minus 127, you know, the coin will go negative, which it won't. So it doesn't make sense. So that's why I'm looking at percentages. Yeah, definitely. This touched that target perfectly. Okay guys, I think we're gonna wrap things up. I want to thank you so much for watching. I'm gonna be back on Tuesday. You say, why Tuesday? I was just on holiday. Well, the truth is that on Monday it's a UK bank holiday. So the futures markets or CFD markets, most of them are going to be closed, like the FTSE, DAX, and I suspect the US stock markets are going to be open, but there's going to be less liquidity than usual. And currency is going to be open, of course, so you're going to have some action, but it's a bank holiday, so I'm not going to be in. I don't think it's going to be too busy on Monday, to be honest. So I'm going to be back on Tuesday, August 28th. Okay guys, have a great day. Don't forget to click on the link and to like the video as well. Don't forget to follow me on Twitter for more updates like this. Here is my Twitter handle, AlexFX00. If you're not on Twitter, it's time to get involved at AlexFX00. Have a good day guys, and thanks so much for watching. Thank you.